So we got the first trading day for June. A lot of people were interested as to what would happen with all of the news regarding trade talks and it being an event traded market. Stocks kind of started off cautious, and as everything went through and progressed over time, we ended out the day positive, even though we were down starting off the day. Now, this is, in my opinion, because I'm going to scroll down so you could just kind of see how everything performed. It's because of a few different reasons. And the main reason I believe is that it was quiet out there. China accused the US of violating their trade truce, mainly around restricting them from AI chips and revoking student visas from China, people wanting to study abroad. And that was seen as discriminatory and restrictive as far as China's point of view, and they want us to stop immediately. Treasury Secretary Scott Bessent came out on Sunday and said that he's confident that it'll all get ironed out. It's just a matter of getting there. But wait, there's more. So now the European Union, the EU, is preparing to retaliate and issue their own reciprocal tariffs now on the US. And this is if the US and the European Union's trade talks don't succeed swiftly. And this is causing a lot of confusion in the market. So it makes sense as to why everybody was a little, I don't know, should we buy it? And start off a little lower, and then throughout the day, as the day progressed, we ended up a little higher than where we started. Trump was pretty quiet today as far as this kind of stuff, but we did get a Truth Social post. And y'all, remember, I am not a Donald Trump YouTube channel. I am a financial, economic news, market watch kind of guy. But this is what the market is moving off of, so this is why we're covering it. If other countries are allowed to use tariffs against us, and we're not allowed to counter them quickly and nimbly with tariffs against them, our country doesn't have even a small chance of economic survival. And it seems like we're headed that direction. We got China pissed at us. We got the European Union pissed at us. And it's causing a lot of uncertainty, at least here in the short term. In the long term, we think everything's good, but here in the short term, maybe the tariff mess is behind us, maybe it's not, maybe it gets worse, maybe we go into escalated tensions with some of these other large countries around the globe. A lot of uncertainty in the air with high interest rates. So everybody's going to be watching that. And other than these trade talks, something else that people are watching is the consumer. So with the consumer, there's a few different things. Right now, there's good data and then there's bad data. We were kind of talking about the hard data and the soft data in yesterday's video, and we got to learn about that yesterday. But what we're seeing is that personal spending rose. It didn't rise a whole lot, but it rose, and anything's better than nothing as far as spending goes. The savings rate did surge up pretty high. People are still spending, so they're still saving as well. They're still spending. Personal savings spend went up, still saving. The savings rate ticked up to 4.9%. And then consumer confidence is also increasing, and it's showing that people are optimistic about the way things are going. Consumers are confident. It increased to 52.2, so it's over that 50% mark. But there's some things to be like weary of, right? Back to that personal spending. Yeah, it rose, but it's not rising a whole lot. Like 0.2%, that's not a lot at all. That's pretty close to zero, and even the possibility of going negative. So that's a concern. We just said interest rates are still a concern. They're still pretty high. Think about these mortgage rates, where those are at, being around 7%. That's very restrictive as far as what people can afford to borrow. It makes borrowing money more expensive, thus being tighter on these consumers. Think about jobless claims as well, that we also seen those rise to a 5-week high of 540,000 jobless claims being filed. And this is an interesting one. So we had Campbell's chicken noodle possibility. We had the CEO Mick B. I'm not even going to try to pronounce his last name. He came out and revealed that consumers are cutting back on snacks and cooking more at home and avoiding dining out. That just goes to show that people are kind of like back to that personal spending. It rose, but it didn't go up extremely. And we also seen that people are starting to save more, quite a bit more. And that's right in line with what Campbell's is warning, that people are dining at home and kind of cutting back. So consumers overall are moving cautiously and they're cutting back on some of these bigger ticket spends. Now, we got some data out today. We got US manufacturing PMI. And what that revealed is tariffs are still raising havoc. It resulted in a weak report, so to say. So it slipped to ISM manufacturing activity slipped to 48.5, which it was its lowest since November, and it slipped to 48.5 in May from 48.7 in April. Now that 48.5 we got, they were expecting it to come in at 49.5, so it came in a little bit lower. And this 50 mark, we're below 50. 50 is the mark that divides both growth and contraction, and we're under 50, so we're more in a contraction side of that report. And some of the reasons why would go to government spending cuts or delays, tariff uncertainty, trade retaliation, which we're starting to see more of that, price increases and supply chain disruptions, all causing concern out there. And back to this right here, Mr. T-Man. Here's a Wall Street Journal report by Xavier Martinez, Andrew Levinson, Jasmine Lee, and it's the Trump tracker. 75 notable moves in 134 days for President Trump. And you could scroll through here and see everything he's done, but it's a lot and it just keeps on changing fast. And I'd imagine we're not done yet. So this volatility we're seeing in the market, I'd imagine it keeps going. And look at Bitcoin, where we kind of got a surge today. And I'm thinking maybe more people are trying to get away from the US, like US assets. And there are people still buying, but just overall, let's look at gold real quick, and this will drive us home on that one. So gold, let's see how gold performed. Going up, Bitcoin going up. And some people say Bitcoin's digital gold. Who knows if it is or it isn't. But with gold going up, that's pretty bullish for Bitcoin because people think Bitcoin's digital gold. And it's away from fiat risk and governmental risk and all of that. Now, Bitcoin is a risk on asset. And think about it. There's a lot of risk associated with Bitcoin. Now, whether you agree with me or not, we got MicroStrategy borrowing billions and billions of dollars to buy Bitcoin. They keep on buying it. They just bought some today, I believe. And countries are gobbling up gold for sure. That one, like, it's physical, you could touch it. Bitcoin's just like internet digital money. But I could see it playing in my own unofficial, I'm a rookie, right? Unprofessional opinion, I think Bitcoin, at least not cryptocurrency, but Bitcoin plays a role in the future to some extent or another. Now, let's look at some of these major indices. So let's pull up the SPY. Let's pull up the NASDAQ. And y'all, if y'all ever wanted to support the channel, you could always go grab some free stocks here on where I like watching stocks and charting and all of that. You could do that here on Webull. Just go to here, let's put it down real quick. Let's go to joelshakur.com/visit, and you can support me there. And you'll see I got some for joelshakur.com/stocks. There's more there. I'll let y'all check that out. But we're going to pull up the SPY. So the S&P 500, top 500 companies. The NASDAQ, this will mainly be your tech companies. The Dow, let's pull up the Dow Jones Industrial Average. Let's pull up, we got QQQ. Let's pull up the Russell 2000. So this will be your smaller companies. They're more risky plays, so to say. Let's pull up TLT. This will be your 20 plus year bonds. which I'd imagine the yield spiked today just with more uncertainty, given that. All right, yeah, so I didn't really move too much. We're still on this line, and it just seems glued to this line. Who knows if we bounce off of this or we plunge lower and yields keep on going up. All right, and then maybe the VIX. A lot of people were watching. Oh, no. Forget the VIX. Let's pull up the DXY, which there were some news articles talking about the DXY. So for one, with gold, it had its worst month since December and May, but it's still up 25.1% year to date. I'd imagine it's a little bit more after today. And this is rising on trade war fears and looming battles over tax and spending in the US market. So think about that debt ceiling being increased yet again. Then we got the dollar. So the dollar on the opposite end, you got gold doing pretty well. And then you got Bitcoin doing kind of well. It's away from the US dollar. It's more digital gold, some believe to say. Now, the dollar, and we're right on a major line. That's crazy. Look at all these lines. It just kind of glues. And look at this yellow line I got on the NASDAQ 100, QQQ. Maybe we're headed back down to 510 pretty soon. Not financial advice or trading recommendation for you, but that's just where I got a line. Now, the dollar is close to multi-year lows. Its vulnerability to there's a lot of vulnerability to any weak US economic data coming out. People are reacting more to this weak data than stronger data, says HSBC. And they went on to say that many are looking for a new catalyst for the dollar to resume its downward trend, because we could pull up a chart and you could see that the US dollar over its all-time chart has just been down. I want to say like it's lost 80% of its value over time. And more recently, it's induced to higher import duties, so these tariffs. And think about what we just got. A double on tariffs from 25% to 50% on both steel and aluminum. And overall, let's just back up. Knock out steel and aluminum out of the picture real quick. What do tariffs do? They raise prices. And what do people know about tariffs? They raise prices. So what does that do to people's inflation expectations? It raises their inflation expectations. And then businesses are like, well, I mean, we got to raise prices. Prices are going up. And people are already expecting prices to go up. So what the heck? Let's raise prices. And that's exactly what people are doing. And that's why the dollar is coming low, going lower. Now it makes it cheaper for other companies to buy American goods because the US dollar is cheaper, and usually US assets are denominated in US dollars. And if the dollar is weaker value in comparison to other currencies out there, they're able to buy more, get more bang for their buck because the dollar went down in value in contrast to theirs. So there's a lot of moving, y'all. A lot moving. June is going to be a month to watch just because overall, let's eliminate some of these charts. We see a lot of green. Overall, we see a lot of green except for treasury bonds, which the yields are green. And we'll look at CNBC. Let's look at what some of these yields are doing. The 10 years really important because this is what Treasury Secretary Scott Bessent said he's going to focus on bringing down. He didn't necessarily say the 30-year, just the 10 years, kind of what he poked out. I'd imagine they both need to go down, but let's see how we move today. If we load, come on, we could load. All right, so yields fell down a little bit. People buying the dip, and there's also articles saying that yields historically go down in this certain, I didn't go really into it, but they're predicting that in the coming weeks, yields on these 10-year treasuries should be lower than where they're at. So let's say these yields go down to 4%. I don't know that that's going to happen, but just for the example, if these yields go from 4.44% to 4%, bond prices go up, right? So, I mean, TLT is 20 plus year treasury bonds, but let's just imagine there's a correlation there. So 10-year treasury yields fall, bonds go up in price because people are like, oh yeah, let me get some of that yield, more demand. The supply is the same or even less because people's buying it up. bond prices go up, so yields fall, TLT goes up in a way. It's kind of like a stock. And then what else were we going to look at? We're going to look at QQQ real quick. Maybe let's have 4 charts up. Let's have QQQ. Come on, you can load. I promise you could load. BTC USD. Let's have XAU USD for gold. Perfect. Come on. And then let's have DXY up. Let's put these charts out a little bit longer. Let's do the day chart. Let's see what it gives us. This ain't far enough out. I want a little bit longer. Maybe the week chart. This ain't long enough. All right, let's go out a month. So we see gold's just been straight up over the past, pretty much since it bottomed out in, let's say, 2015-ish. It's just been straight up. And a lot of this has been since September 30th, let's say, of 2023, and really straight up since then. What about the dollar? So the dollar hit the all-time, it's been in September 30th of 2022. Hold on, let's look at this real quick. That's kind of where gold bottomed out about, let's say. So the dollar was high. And look at that, look at that. The dollar was kind of high. And then people started getting away from the dollar, and we've seen gold really go up. What about Bitcoin? Same with Bitcoin. Bitcoin started going up, and the charts kind of look, assuming you can see all of this with Bitcoin right now, it really resembles the chart of gold, if you could get aside all this mess that I got. And then what about QQQ? 22, same thing. So it's like people had all these dollars and the dollar was worth a lot, and then they're like, well, I need to buy something with these dollars. I'm not just gonna like hang them up on the wall and like look at them. I want to buy stuff. And then you can see these assets all started going up as dollars started falling. And maybe that's why people are expecting some type of catalyst to come out to allow the dollar to continue its downtrend. But we are off of a line, and we could bounce back higher. Assets could come down a little bit. Who knows? All of that's up in the air. But y'all, that is what I got today. Ton of moves going on, a lot of moving pieces. I'd say the main news we got today was mainly along the lines we already knew. China accused the U.S. of violating its trade truce. That came out over the weekend. You've seen the video for that already. I already covered that. The new one was the European Union mentioning reciprocal tariffs on the U.S. now, so that'll be a complete new one to that one. I mean, tariffs aren't gone yet. Things are just heating up in the oven, so just wait on that one. So we knew that came out, and a lot of quietness despite all of that happening. There weren't a lot of crazy moves in the market. We've seen gold and safe haven assets get kind of bought, some less than others. Like those treasuries are known as a safe haven asset, but we've seen yields fall a little bit, but not really. We did see gold really go up today, and then we also, how much was gold up again? So today gold was not too much. So I guess it all falls in line. Bitcoin was the winner as far as percentage wise, being up 1%, in gold and treasuries were slightly negative, and gold was slightly positive, like barely over 0% on the green. So that's how everything's moving, y'all. I believe there wasn't really much else going on. We had Jerome Powell talk today. He didn't really say too much. It was a pretty short, brief meeting, and we just got more economic data to watch. Remember, mark your calendars for Friday when we get this labor report in. We got labor report, and then unemployment and BLS employment. We got a ton of labor stuff coming in at the end of the week, mainly Thursday and Friday. Mainly Friday, mark your calendars. That is the big one everybody's going to be watching. But until then, y'all, hope your day's great. Check out my link I had, and have a good one.